What's up guys, my name is Roman, and in this video we're going to take a look at what the hell's happening in the markets. Now remember, this is not financial advice, and anything expressed in this video is strictly my opinion. With that out of the way, let's jump into it. There's been a steady decline in the cryptocurrency markets over the last month. Bitcoin itself has fallen about 70% from its highs to a low of 6,000 US. A lot of you are out there searching for answers, trying to understand why this has happened, where it's going, and what to expect next. What I hope to show you in this video is where you should be looking to confirm any sort of trend, and in my opinion, what's happening with this one. Looking at the price of any cryptocurrency, there's a constant battle between the fundamentals and the speculative investors. You can think of charts as visual representations of what's going on with this battle. What this means is that when something fundamental changes in the network, for example, adoption, regulations, improvements in technology, or more importantly, when news come out about these fundamental changes, speculators push the price up or down. Well, over the last month or so, a number of major news stories have come out with a negative outlook on the cryptocurrency space. Now, if you haven't been keeping up, these are just some of the headlines that have broken which you may have missed. The Indian finance minister came out and stated that the government does not recognize cryptocurrency as legal tender or coin, and will take all measures to eliminate the use of these crypto assets in financing illegitimate activities or as part of the payment system. In South Korea, the Justice Minister claimed the ministry was preparing a bill to ban cryptocurrency trading. News also came out of police raiding exchanges gathering information. In Japan, a major exchange Coincheck was hacked, losing approximately $530 million worth of cryptocurrency NEM. And over in the States, double trouble. Cryptocurrency Tether announced that they had dissolved their partnership with accounting firm Friedman LLP, who were responsible for conducting an independent audit to confirm that, as the company claims, each Tether is actually backed by $1 held in bank accounts, as well as news emerging that a subpoena was served by the CFTC. Within the same month, cryptocurrency BitConnect also shut down its lending and exchange platform, refunding investors in the coin with BitConnect tokens rather than the Bitcoin which they had actually put in, causing the price of BitConnect to crash spectacularly about 95%. So we see these major headlines come out in the cryptocurrency space, and you're probably feeling like everyone else is. Oh my god, I have to get out of crypto right now. Let's put this into perspective for Bitcoin. I want you to take a look at this table, which shows us major corrections within the market over the last 7 or so years. The two columns to focus on are the dates and the percentage drop in the price of Bitcoin. Each line shows us the duration of each correction, that is, how long until we hit the lowest price point from the previous all-time high, and the size of the drop. So the very top line is happening right now, and it's incomplete because we're not quite sure whether we've hit the bottom yet. Let's go back to the previous major corrections of this scale and revisit some of the headlines floating around the space at the time. I'm going to skip the 2010 corrections because, frankly, at the time, there weren't many trading options, the market was largely illiquid, and there were major price fluctuations and instability throughout. Instead, let's start with 2011. Mt. Gox, which at the time held around 97% of all trading volume, admits its database was hacked and user information was leaked. Within 10 days of this happening, the website mybitcoin.com, offering users online Bitcoin wallets, becomes inaccessible for an entire week. When it comes back online, 51% of its Bitcoin holdings have gone missing. Moving on to the corrections between 2013 and 2015, around this time, the most popular trading platform was still Mt. Gox, with 70% of all trading volume. In 2013, they experienced major prolonged outages to their trading platform, and in 2014, they shut down all withdrawals, coming out to admit 850,000 Bitcoins had been stolen. This turned Bitcoin to the dark ages, a prolonged bear market with lots of investors' confidence lost, and the market at its peak being around $18 billion, still relatively small compared to the numbers we're looking at today. Now, more recently in 2017, these smaller, although still substantial corrections have been attributed to big news such as China banning ICOs and shutting down exchanges, as well as forks in the Bitcoin ecosystem causing uncertainty in the future of the network. So, I'm hoping you're starting to see a pattern here. Major corrections in the past have largely been attributed to substantial fundamental changes in the ecosystem. Major hacks, instability in the infrastructure, uncertainty about the future of the technology itself, all major events that have caused investors to lose a lot of confidence in the ecosystem. Looking at 2018, I want you to ask yourself, what's different this time? Well, everything. Those of you who have been keeping up with the headlines were probably sitting through the start of this video thinking, why are you using those headlines? That's because all of those headlines, after they gained mass media attention, have largely been corrected. India did not really ban Bitcoin. Clarification from the minister showed that they simply do not allow its use as legal tender, much in the same way you cannot use the USD as legal tender in India. Their focus is on stamping out illegal activities relying on cryptocurrency, which is common regulatory practice worldwide. In similar fashion, the Korean government confirmed that they are not banning cryptocurrencies. Investigations have been opened up into insider trading from the Justice Department around the time of the announcement and police raids. Petitions have been signed calling for the minister to be sacked, and regulations have come in allowing new deposits and trading to resume in early February. The exchange hack? Well, that was dealt with swiftly. They confirmed that everyone who lost money will be refunded the lost funds. This leaves us with two major headlines that are still in question: Tether and BitConnect. BitConnect has long been suspected of being a Ponzi coin. Quite simply, they guaranteed returns on their platform if you locked up funds for a certain period of time. Sounds too good to be true? Well, turns out it is. At their peak, the market cap of their entire platform was $2 billion. Now, understandably, market cap does not represent the value of all money poured into the platform, but even if we assume $2 billion at its max worth of loss for investors, this is a relatively small figure in the total pool of the $400 to $800 billion cryptocurrency space. This takes us to Tether. They are also a $2 billion plus market cap cryptocurrency. The firing of the accounting firm tasked with providing an audit of their books appears questionable, as well as news of being subpoenaed. Where there's smoke, but this is still not proof of actual fraud. Their stated reason for firing the accounting firm was simply that they will not be able to accomplish an audit within a reasonable period of time. After the story started to circulate about the subpoena, it turned out that they actually served this notice in early December and not in mid-January. It is my opinion that having received the subpoena in early December and from that point printing around $1.5 billion worth of tethers, they would be crazy to do this all while under scrutiny from the CFTC. It's not proof that they are fully backed, but it does provide you with more information to consider. So having seen all of this, I want you to think back to the fundamentals. I know the headlines at the time seemed very scary, but I want you to consider all of the information that's come out since. Do you feel like this major correction should be on par with all prior movements of 70% or more? What we haven't looked at are the positive fundamental changes. Just to give you a small taste of what's been happening, the Lightning Network, a major scaling solution to Bitcoin, was launched on the mainnet, growing in adoption daily. The rise in transaction batching and the use of SegWit has helped bring average transaction costs down, roughly on par with what we saw in October last year when Bitcoin was around 4,000 USD before the major rally. And finally, the SEC has just released their opening statements for the upcoming Senate hearing in the US, giving an overall supportive tone and referring to cryptocurrencies in the same spirit as the internet. They've stated that the genie is now out of the bottle, and innovation should not be stifled in the financial sector. This is a surprise to many who expected a harsher clampdown on ICOs and an overall negative tone regarding cryptocurrencies. Now, this doesn't mean that the market is suddenly going to stop correcting. Once the trend is set, it takes a lot of momentum to change direction. How long this takes is anyone's guess. Is it more good news? Is it one major event? Or is it just ongoing increased adoption? What your job is through all of this is to keep your head above water. Everyone will be telling you that the end is here. That's normal in any sort of major correction. Even in massive rallies, there are many people that will still tell you that it's not going to end. It's just going to keep going forever, all the way to the moon. Now, there's a reason why the same old advice is repeated over and over again. Do your own research. That's really all it comes down to. Just like this video, I'm simply presenting a point of view. It's up to you to review the information and decide what you're going to do with it. And finally, wise words from economist John Keynes. The market can remain irrational longer than you can remain solvent. Just because the fundamentals appear good and the price action seems unsubstantiated doesn't mean we're going to see a change tomorrow. Remember what we said, there's a constant battle between fundamentals and speculative investors. That's it for me, guys. I hope you enjoyed this video. If you have any questions, please leave them in the comment section down below. Make sure you hit that subscribe button to be notified of any new videos as they come out, and I'll see you in the next one.